Hello, Oracles! Well, today we got some leaked information coming out of Reuters about some production goals that Tesla has for the end of this year and for the first 3 quarters of 2023. And so when you first look at it, the numbers do look really insane, but you gotta remember that Tesla's goals have usually been pretty insane, especially for an automotive manufacturer. So the first numbers that we had heard, and Dave Lee did confirm all of this, he actually happened to be over at Investor Relations over at Tesla and happened to ask him when he was on the phone with them to confirm any of this, and they said, we can't confirm nor deny any of these numbers, but do the math on it. So doing the math on it, looks like Q1 through Q3 of next year, they're looking to be producing 1.6 million Model Y and Model 3. And so taking into account that the S and the X don't really make up a lot of their numbers, that's the majority of their numbers anyway. And so then factoring in Q4, you're looking at about 2.1 million vehicles, which would be a 50% year-over-year growth, assuming we get to that 1.4 million vehicles this year. So now looking at this year, we're looking at Q4, they're saying that they're looking at 495,000 Model 3 and Model Ys being produced. That's insane. Now for me, I actually had them with my bullish case looking at over 500,000 vehicles getting delivered. Historically, when you look at Tesla, their Q4 has produced as many vehicles as 2 years prior. So 2 years ago in 2020, they produced just under 500,000 vehicles. So with that, they're looking at the same thing in this year at 495,000 at Q4. So those numbers do all jive. And so then if you factor in the Model S and the Model X, you're looking at a little over 500,000 vehicles for Q4. Is it possible? Troy Teslike seems to think that it might not be possible. I don't know. I mean, Tesla has pulled out some crazy things in the past. And so mathematically, if they produce 360,000 vehicles in Q3, then 473,000 vehicles in Q4 would get them to that 1.4 million or 50% year-over-year growth. So pushing 495,000 vehicles is going to put them significantly higher than that. We'll see how this plays out. And something that Gary Black had brought up is the fact that Tesla historically has just given out 50% year-over-year growth for guidance. That's it, no specific numbers. So I'm wondering if these numbers are an internal number that they go by and say, hey, we are still going to give our public number of 50% year-over-year growth, but internally these are the specific numbers that we are shooting for in order to hit that 50% year-over-year growth. This is what my guess is when we hear numbers like this. I'm guessing that internally, these are the numbers that they're discussing and saying, hey, in order to get to our 50% year-over-year growth, this is what we want. But to go to the public and just say 50% year-over-year growth, that's all they need to give, because that's a massive growth when it comes to a company that is growing like Tesla is growing and still continuing to do that at the size that they are at. So 50% year-over-year growth is fine, because if they give out specific numbers like that and they come up a little bit short one quarter, a little bit over in another quarter, that's going to throw things off even more. So I think staying safe with the 50% year-over-year growth is good, and then internally they just come up with the specific numbers. Either way, this is insane. So let me know in the comments below if you guys think that they will be able to achieve the 495,000 Model 3 and Model Y. Personally, I think it's possible. Like I said, those of you who follow me on Patreon and who are members, you guys can see my production and delivery numbers, and that's where I had them originally. I have tweaked them down a little bit, but I mean, I was looking at about 370,000 vehicles getting produced and delivered for Q3 and just under 500,000 vehicles for Q4. That's where I had been all along until I ended up tweaking it down a little bit based on some of the bottlenecks that we had seen recently. So is it possible? Sure. Do we need to have some good tailwinds behind us? Absolutely. So again, let me know in the comments below what you guys think. And so looking at the stock performance today, we did outperform the market. We were still down just over 1%. I think maybe some of the outperformance has to do with maybe some of this leaked information. Plus, of course, we have AI Day 2022 coming up tonight. I will be on that live stream with my Tesla weekend. I do not have a link from Brian yet, but you guys can just go check out his channel. We will be on there. I'm not sure what time he is starting it. It's a long event, so I don't even know if I'm going to be on for the entire thing because it starts after my bedtime. But it's such an awesome event. I definitely want to be on there and share it with you guys. So definitely hop on over there. So that outperformance today was very nice. And now looking at the levels that we traded at today, we closed just over that $265 support level that we have been discussing. So again, I was saying all along, as we drop down to these levels, we have been closing right at the levels that we have been discussing. And then we had broken down and we fell to the next level below. So now we have fallen to that $265 level. I do not know if we are going to fall any further, but the next level below this is that gap at $258. So somewhere around there may be where we find that next level if we do break below this 265. and now below that we have $247 as a gap with a $245 support below that. And so looking at these levels right now, if we are looking at the most recent highs that we had of $309, if you knock us down to a bear market from that point of 20%, because a 20% drop is considered a bear market from recent highs, if we do pull down to that level, guess what? 20% down from 309 is 245. So just saying, looking at the charts, looking at the numbers, looking at how things do end up playing out, this is a possibility. This is why I have been looking at these numbers all along, looking at these gaps to potentially get filled, looking at the news. Now, of course, with AI Day 2022 tonight, with the production and delivery numbers coming over the weekend, who knows what's going to happen on Monday? So I don't know what's going to happen. Of course, there's, a lot of times when you get this news over the weekend, a lot of things can happen. So there's probably going to be a gap one way or another on Monday, most likely. We'll discuss that when we get to it. But this is just the things I'm paying attention to. So again, looking at these levels down. Now, if we do end up running and we go higher up, again, all of these levels that we have been talking about are now going to act as resistance levels going up. So that 275 level that we were fighting to come down below, we will see that fighting on the way back up. We'll then have 289 above that, then 300, and then 313. All of these numbers are going to play in reverse the other way as well. And now one of the reasons we probably saw some red today was this morning we got our PCE numbers that came in. This is the personal consumption expenditures that come out. And this is the preferred number that the Fed likes to look at when it comes to inflation. So we were looking at a number that came in at 0.6%, which was higher than expected when it came to this PCE number. So that means that people are still spending more money. So the inflation is not causing people to spend less. This is going to reiterate the Fed's hawkish stance. That's probably why we ended up seeing a bit of this sell-off today, because we are really trying to get inflation in line. Because right now we have a Fed that is battling a problem where there's too many job openings and not enough people to fill these jobs. We have inflation that is still high. We have people who are still spending extra money in spite of the inflation that is out there. So this is why the Fed needs to keep a hawkish stance and why the market is now looking at a potential stronger recession coming up, because we may be getting to a point where the Fed has no choice but to force a recession to happen in order to slow the economy down even more. So a lot of uncertainty still going into this. The next inflation data that we are going to be having coming out is going to be the CPI in a couple of weeks in October. So hopefully at that point we are going to see some smaller numbers coming for inflation, and inflation is still going to be high, but if we can start seeing numbers in the sevens, that will be moving in the right direction and hopefully keep the Fed moving and saying, all right, we don't need to force anything higher than we are already going, maybe not be as hawkish. We still have discussions about potentially seeing natural deflation coming. We are still talking about a lot of companies out there who are either doing hiring freezes or people are leaving the company and they're just not replacing them. I was talking with my son's stepdad and he was discussing how over at his job, they're already discussing with the higher ups a lot of layoffs that are going to be going on in the future for them because, they're seeing a lot of issues going over on in Europe and they're anticipating a lot of those issues going to be coming here over to the US very soon. So I think that wave is coming and we are going to be seeing a lot of this labor kind of start to balance itself off because we've been seeing a lot of earnings coming down. We're hearing about the layoffs. We're hearing about the hiring freezes. Back when I worked at Home Depot back in 2008 and 2009, during the housing recession, there was a 2-year hiring freeze going on at that point for Home Depot. I have no doubt we are going to be going into times like this again. This will end up slowing the market down. This will help us grab our footing again. And again, if you look back to that 2008 and 2009 timeframe, if you follow the S&P, somebody has a great chart over on Twitter showing it. The stock market charts are following the exact same trend lines. So we can still see a little bit of a pullback in the market coming. Everything needs to settle and balance out. Then we can get our footing and foundation and then build up again. So again, very uncertain times, don't know what's going on. These are the times again where if you had invested in the top companies back in those times and had that cash flow coming in to invest, you did very well coming out. Many of you I discuss in the comments, here, tell me how that's exactly how what you did. You invested during those times back then, and you are now doing very well during these times now. You invested in real estate, you invested in stocks, lots of things when the entire economy is suppressed. That's when you want to invest. So thank you guys for sharing your knowledge, wisdom, and experience going through those times to remind us all that this too will pass. And these are the times that you do want to invest as much as you can, but doing so wisely so that when we come out of this, because we will come out of this, And when we do, those investments are going to pay off. As I had said yesterday, don't look at the share price, look at the share quantity. You want to accumulate as many shares as possible during these times because that is what is going to make the difference when we get back to a bull market. So again, let me know in the comments below, how did you feel about the stock movements today? What do you feel about the recession coming up? Do you think it's going to be a bad one? Do you think we're going to skirt by it? How bad do you think it's going to get? And let me know about these production numbers that were leaked out today, what you guys feel about them. Do you think they're achievable with this 495,000 vehicles for Q4? Let me know your thoughts on that. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. If you find any value in this video, please consider sharing it with others. We do have a membership program where one of the things I share is all of my production and delivery forecasts for the future. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat, that link is down in the description. And if you'd like to support the channel any further, we do have a Patreon, that link is also in the description. Thank you so much, have a great one.